At Archford, we have a common theme among many of our clients. That is their desire to be philanthropic. Many of you in this room graciously donate to charities that are close to your heart. As we all know, there are many ways that people give. Let's talk about how philanthropy is being changed through the bill.
Yeah, Chuck, OB3 made a number of important changes to the deductibility of charitable contributions. I would say one positive and a couple of negative changes that they made. I get to cover the positive one. If you remember during COVID, they had that one time, I think actually it might have been a couple of years, where you could deduct $300 gift to charity if you did it in cash, and it didn't matter whether you itemized or not. Then that went away. Well, they brought it back and they've raised the number up to $1,000 for an individual and $2,000 for a couple. So the beauty about this is one of the few benefits that we got out of this bill that has no limits on. In other words, doesn't matter how much you make, doesn't matter whether you itemize. It has to be in cash, and it has to be given directly to a charity. You can't put it in a donor advised fund. But beyond those two restrictions, everybody starting next year can write off up to $2,000 for a married couple, even if you also have charitable deductions on your itemized deductions or have other itemized deductions. So it's a nice benefit, and I think based on national average, that 1,000 and 2,000, that they didn't make those. They're nice round numbers, but that $1,000 to $2,000 number is on a national basis is an average number that people give. So for a good number of folks that don't give a lot but do give a meaningful amount to charity, the $1,000 and $2,000 deduction is going to be valuable to them.
So I'll talk about the negative. Starting in 2026, so you still have 25 to not worry about it, but starting in 26, if you itemize and if you donate, you're going to have a 0.5% cut on your charitable donations of your AGI. So for example, 250,000 married couple is your AGI. You donate $5,000. The first 1,250 is not going to be deductible. So that's the 0.5% floor. Corporations have a 1% haircut, a floor. So again, 100,000 in taxable income, $5,000 donation. If the first 1,000 is not going to be deductible.
One thing I do want to bring up again is something that Jeff mentioned earlier in his discussion was that 37% tax brackets are limited to the 35% cash donation. Also, the bill was made permanent where the the donations are limited by the 65% instead of the 50% AGI. So that was made permanent as well, which is a big plus.
I would say, based on those two negatives, anyone who's thinking about making a large charitable contribution, if it's just something that's been on your wish list, something you've thought about doing, you might ask yourself and certainly have some numbers run as a benefit of doing it before the end of the year. You could put it in a donor advised fund, so then you could dole it out to charity over years and get the charitable deduction today. But anybody who's thinking about a large charitable gift, you really should explore whether or not you should be doing this year before those two haircuts happen next year. And so there's no question in its most simplest form, you're going to get more bang for your charitable deduction this year than you would next year based on those adjustments that they plan on or that are going to be implemented starting next year.
So a quick planning tip, if you're over 70 and a half, there's something called a QCD, Qualified Charitable Distribution, that you can give directly from your IRA to the charity, and it's not considered taxable income, and you would not have the 5.5% haircut on the itemized list. So you can take it directly out of your IRA.